Starting a business in Kenya sounds exciting when you first think about it. Many people dream of becoming their own boss, making more money, escaping unemployment, or building a better future for their families. Social media makes entrepreneurship look easy. Every day you see young people posting photos in expensive offices, driving luxury cars, traveling, or celebrating business success online. Some people even claim they started with only a few thousand Kenya shillings and became millionaires within months. Because of this, many Kenyans believe business is a quick way to financial freedom. But the reality on the ground is very different. The truth is that starting a business in Kenya can be one of the hardest journeys a person will ever take. It can test your patience, your finances, your emotions, your relationships, and even your mental health. Many people enter business with excitement, only to discover that survival is much harder than they expected. Some lose all their savings, some fall into debt, others close down quietly after months or years of struggle. Many never talk about their failures because society celebrates success more than honesty. This does not mean business is a bad idea. Kenya still has many opportunities. Thousands of entrepreneurs are succeeding in different industries. However, success usually comes with sacrifice, consistency, discipline, and years of hard work. One of the first harsh truths is that passion alone is not enough. Many people start businesses because they love something. Maybe they love fashion, cooking, photography, beauty products, or electronics. Passion is important because it helps you stay motivated during difficult times. But passion without market demand can destroy your finances. For example, somebody may love opening a boutique in Nairobi, Mombasa, Kisumu, or Nakuru. They spend hundreds of thousands of Kenya shillings decorating the shop, buying shelves, mirrors, branding materials, and stock. Everything looks beautiful, but after opening, customers are few because there are already many boutiques nearby selling similar products at cheaper prices. The business owner then realizes that passion does not automatically bring customers. The market only rewards businesses that solve real problems or offer something valuable. Many entrepreneurs in Kenya copy what others are doing without proper research. If one person succeeds selling perfumes online, suddenly hundreds of other people start doing the same thing. If one milkshake business trends on TikTok, many others copy the exact model. This creates overcrowding. Competition in Kenya is extremely aggressive. Sometimes competitors even sell below profit just to attract customers. Others copy your branding, business name, products, or marketing style. In some industries, survival becomes a daily battle. Another harsh truth is that starting capital is usually much higher than people expect. Many first-time entrepreneurs think business only requires stock and rent. But after starting, hidden expenses begin appearing from every direction. You may need money for licenses, permits, internet, electricity, transport, packaging, repairs, taxes, employee salaries, advertising, delivery, bookkeeping, and security deposits. Some businesses also face unexpected losses from theft, damaged stock, fake products, or slow sales. For example, someone may plan to open a small cosmetics shop with 200,000 Kenya shillings. They budget for rent, stock, and branding. After opening, they discover monthly expenses are higher than expected. Sales become inconsistent. Customers buy on credit. Suppliers increase prices. Soon the business starts struggling with cash flow. This is why many businesses collapse even before making profits. Cash flow is one of the biggest killers of small businesses in Kenya. A business may appear successful from the outside, while secretly struggling financially. You may see customers entering the shop daily, but profits are very low because expenses are too high. Some businesses survive only because owners keep adding personal money every month. Many entrepreneurs also fail because they mix business money with personal expenses. Once sales come in, they immediately start buying clothes, phones, vacations, or luxury items before the business becomes stable. Business money should first support growth and operations. Another difficult reality is that Kenyan customers are highly price sensitive. Most people want quality products, but they also want the cheapest prices possible. This creates pressure on businesses because profit margins become smaller. A customer may praise your product today and still buy from a competitor tomorrow because the competitor reduced the price by 50 Kenya shillings. This can become frustrating, especially for small businesses trying to maintain quality. Inflation and economic pressure have made consumers more cautious with spending. Many households are struggling with high food prices, transport costs, school fees, rent, and electricity bills. Because of this, people compare prices carefully before buying. Some customers will negotiate aggressively, even when your prices are already low. Others will request credit constantly. Friends and relatives may become some of your hardest customers. Many entrepreneurs expect emotional support from family and close friends, but the reality can be disappointing. Some relatives ask for discounts every time. Others delay payments or ask for free products. Some never support the business at all. This teaches entrepreneurs an important lesson. Business should not depend on emotions. You must learn to operate professionally. Marketing is another area where many Kenyan businesses struggle. Opening a business does not automatically attract customers. Many entrepreneurs believe people will simply notice the shop and start buying. Unfortunately, this rarely happens. Today, competition is too high. Businesses must actively market themselves every day. Digital marketing has become extremely important. Customers spend many hours online on WhatsApp, Facebook, Instagram, TikTok, YouTube, and Google. Businesses without online visibility are losing opportunities. However, online marketing is not as easy as many people think. Running advertisements costs money. Content creation takes time. Algorithms change often. Some advertisements fail completely. Some businesses spend thousands of Kenya shillings on ads with very poor results. Building trust online also takes time because many customers fear scams. This means entrepreneurs must remain patient while building their audience and reputation. Another harsh truth is that many businesses grow slower than expected. Social media has created unrealistic expectations about entrepreneurship. People now believe success should happen quickly, but most businesses require years of consistency before becoming stable. There are business owners in Kenya who worked for 2 or 3 years before seeing meaningful profits. Some operated at losses during the early stages while learning the market. Entrepreneurship requires emotional resilience because progress can feel painfully slow. There are days when sales are excellent, then suddenly sales disappear for weeks. Some months become extremely stressful. Rent deadlines arrive. Suppliers demand payment. Employees expect salaries. Meanwhile, customers are few. This emotional pressure causes many entrepreneurs to quit too early. Another serious challenge is taxation and government compliance. Many small business owners underestimate how complicated compliance can become. Entrepreneurs may need county permits, business registration, tax compliance, electronic tax invoicing systems, and sector-specific licenses. For some businesses, penalties for non-compliance can become expensive. Many entrepreneurs also complain about multiple levies and rising operational costs. This is especially difficult for small businesses operating with limited profits. Business owners must therefore educate themselves continuously about regulations and legal responsibilities. Loans are another dangerous trap for entrepreneurs. Many people start businesses using debt from banks, savings groups, mobile lending applications, or relatives. Borrowing money is not always bad, but debt becomes risky when business income is unstable. Interest continues increasing even when sales are poor. Some entrepreneurs borrow more money to save struggling businesses, only to create bigger financial problems later. There are people who lost property, savings, or peace of mind because of business debt. Starting small is often safer than borrowing large amounts immediately. Mental stress is another hidden reality many people never discuss openly. Running a business can become emotionally exhausting. Entrepreneurs carry heavy responsibilities daily. They worry about bills, customers, employees, stock, rent, and competition. Some even lose sleep because of financial pressure. In Kenya, many business owners suffer silently because society expects entrepreneurs to appear strong and successful all the time. People rarely talk openly about burnout, anxiety, or depression caused by business stress. This is why discipline, support systems, and mental balance are important. Rest is not laziness. Another harsh truth is that some business ideas simply stop working over time. Technology and consumer behavior change quickly. Businesses that were profitable years ago may struggle today. For example, many traditional cyber cafes lost customers because smartphones became more common. Some video shops disappeared because streaming services changed entertainment habits. Businesses that fail to adapt eventually become irrelevant. Entrepreneurs must therefore remain flexible and willing to learn. Technology is no longer optional. Today, even small businesses benefit from using digital tools. Mobile money, online marketing, customer databases, delivery applications, and social media promotion have become normal parts of business operations. Customers now expect convenience and fast communication. If you ignore technology completely, competitors may overtake you quickly. Another reality is that suppliers can either help your business grow or destroy it completely. Some suppliers delay deliveries, increase prices suddenly, or provide fake products. Others become unreliable during high-demand seasons. A single supplier mistake can damage your business reputation. This is why entrepreneurs should always build relationships with multiple suppliers and inspect products carefully before selling. Corruption and dishonesty also remain challenges in some areas of business. Some entrepreneurs encounter fake brokers, fraudsters, dishonest employees, or scammers pretending to offer opportunities. Others lose money through fake tenders, counterfeit products, or online fraud. Trust should therefore be built carefully. Documentation matters. Verification matters. Patience matters. Location is another major factor that affects business success in Kenya. A good business in the wrong location can fail badly. High rent does not always guarantee high sales. Some entrepreneurs spend large amounts renting expensive spaces, hoping customers will come automatically. But foot traffic, accessibility, customer income levels, parking, and visibility matter more than appearances. There are small businesses in ordinary estates making more profits than businesses inside expensive malls. Entrepreneurs must understand their target customers before choosing locations. Employment is another complicated issue. Hiring workers can help a business grow, but managing employees is not easy. Some workers become unreliable, careless, dishonest, or unproductive. Others leave suddenly after learning the business operations. Payroll pressure can also become stressful during slow months. Because of this, many small businesses initially operate with minimal staff. Another difficult reality is that business relationships sometimes destroy friendships and family ties. Partnerships often begin with excitement and trust, but conflicts over money, responsibilities, and decision-making can create serious problems later. Some partnerships collapse because one partner works harder than the other. Others fail because of dishonesty or lack of clear agreements. This is why written agreements are extremely important, even among close friends. Entrepreneurship also demands sacrifice. Many people imagine flexible schedules and freedom, but during the early stages, business owners often work longer hours than employees. Some entrepreneurs work weekends, holidays, and late nights. There are days when business becomes your entire life. Vacations become rare. Rest becomes limited. This level of sacrifice surprises many people who entered business expecting freedom immediately. Another harsh truth is that trends can be dangerous. Kenyan entrepreneurs sometimes rush into businesses because they are trending online. For example, if one business becomes popular on TikTok, many people quickly copy it without understanding the risks. By the time most people join, the market is already crowded. Trend-based businesses can produce quick profits temporarily, but long-term sustainability matters more. Good businesses solve ongoing problems instead of depending only on hype. Fear of failure also affects many entrepreneurs. Some people delay starting businesses because they fear losing money or embarrassment. Others quit after the first setback because they expected immediate success. Failure is painful, but it is also common in entrepreneurship. Many successful entrepreneurs experienced losses before eventually succeeding. The important thing is learning, adapting, and improving instead of giving up completely. Despite all these harsh truths, opportunities still exist in Kenya. The country has a growing young population, expanding internet access, increasing smartphone usage, and rising demand for convenience. Many industries continue creating opportunities for smart entrepreneurs. Digital services, logistics, agriculture, online education, content creation, home services, affordable food businesses, repair services, and specialized online stores still have potential. However, success usually belongs to entrepreneurs who stay disciplined and realistic. The people who survive longest are not always the smartest or richest. Often, they are simply the most consistent. They manage money carefully. They treat customers well. They continue learning. They adapt to changes. They remain patient during difficult seasons. One important lesson every entrepreneur should understand is that business is not a shortcut to easy money. It is a long-term process. Sometimes growth happens slowly. Sometimes profits take years. Sometimes failure becomes part of the journey. But entrepreneurs who remain focused, flexible, and disciplined increase their chances of building something meaningful over time. In Kenya today, entrepreneurship can absolutely transform lives. Many people have escaped unemployment built wealth, supported families, and created opportunities for others through business. But the journey is much harder than social media usually shows. The harsh truth is that business rewards resilience more than excitement. It rewards patience more than motivation. It rewards consistency more than temporary energy. If you decide to start a business, enter with realistic expectations. Learn continuously. Protect your finances carefully. Avoid unnecessary debt. Study your market deeply. Build slowly if necessary. Most importantly, understand that survival itself is already an achievement in business. Because in Kenya, many people start businesses, but only a few manage to survive long enough to truly succeed.